I mean, we're bid up on Omicron and the booster. That seems to be what's driving the momentum in the market. Is that the ultra alpha, or could there be a little bit of ouchiness coming from Saudi Arabia?
I think that is the main reason we're up so much this week. WTI is up more than 10% this week, and Brent almost as much as that. So yeah, it is very much a case that traders are sort of more bullish because they do not think Omicron is going to be as bad for oil demand as they initially feared. It is important to point out, however, that oil has not recovered all of its Omicron losses. It's still, give or take, about $5 a barrel below what it was, before the discovery or the announcement of the Omicron variant. So there's still a bit to go.
So if those are the dynamics lifting oil higher, Jesper, let's bring you into this because energy prices in Europe have hit record highs. We saw that in Germany yesterday. What is the dynamic there driving prices higher?
It's really high fuel prices that will make it very, very expensive to generate power in the fleet of thermal coal and gas plants that is needed still to meet the power demand in Europe. And on top of that, carbon prices also hit a record, so it will be most expensive in history to pollute or let out emissions. So that is also driving up prices for next year.
Yeah, but just, I would encourage everybody to hop on Paul and yours Twitter stream, because what Javier is saying is that bleed through that Jesper's just pointed out, it's not just in the short-term prices, but it's rolling out into the longer-term prices. But here's the point about our market then, which is the curve. So we've got Citi cutting their prices for next year. They're worried about the back end of the curve. What is the curve telling us about the view for 2022?
Well, if you look at things like time spreads, they haven't actually recovered in the last sort of 10 days as much as spot prices have. The market is more, let's say, more bearish about the first quarter, or going into the first quarter of 2022 and going into the rest of that year. Most analysts see a switch from an oil supply deficit at the moment to a surplus next year. It's pretty much just a question of how big that surplus will be and how quickly it comes about and how quickly that leads to oil inventories rising again. I mean, oil inventories have been dropping rapidly over the last year or so, and that's been very bullish for oil prices.
Well, while we're looking towards the future, Jesper, what will be the consequence of an extended period of higher energy prices?
Well, it will show up on millions of consumers and industries' power bills, and it will make it more expensive for those who want to hedge. These are price levels that have never been experienced since the market was liberalized almost 20 years ago, for both for this year and the next year that will be even higher. And even contracts further out, as far as 2023, is still at very historical high levels. So this will be felt by consumer and might trigger a political response.